Last night there was consideration about further strong data out of the States, retail sales, which saw the US dollar strengthen further on expectations perhaps the Fed will maintain its hawkish bias. Nick Twidale joining us from Markets to discuss those latest movements. Nick, good to see you.
Thanks very much.
So, what did you make of that retail sales data? I mean, Americans can't stop spending, can they?
Well, they can't, can they? There's no recession as far as the retail sales numbers are concerned. But I think we've got two data points this week. We've got inflation and we've got retail sales, and they're both leading us to slightly more hawkish leaning from the Fed, and I think that's going to see stronger dollar across the board. Probably one of the few currencies that we might not see the dollar appreciate so hard against is maybe the local. With yesterday's comments from Philip Lowe that we've still got a fairly hawkish RBA as well. So from an interest rate differential point of view, we're sort of in a bit of a battle of the big boys. But I think across the rest of the park, dollar yen, cable, euro, I think we'll probably see the dollar appreciate certainly over the next few sessions, and probably sort of for the next sort of quarter or so.
What sort of data are we looking for ahead from the States, and I guess heading into the next Fed meeting that's likely to keep that strength there for the US dollar?
I think, once again, we've probably had the main data prints already for this month, and then we're going to go straight into the first week of next month. Non-farm payroll is going to be very, very key. We'll see where they come out, and then we're going to be looking at the inflation numbers again. It is a bit of a rigmarole that we're going through, but we really are focusing on data. I think there's a lot of hope that the Fed's going to pull back, and we do see these decent rallies. And it's interesting that last night we got stocks rising and the dollar rising, which has not been a strong correlation over the last year or so.
What does that tell you? Because obviously the equity market, those investors, I guess particularly the traders, are just trying to find any optimistic outlook that they can to trade on.
It does seem that way, and I think we've discussed. I'm a bit of a bear on stocks overall, just because I think the whole global macro situation, we need a bit of a cathartic sort of drop back down in the stock market. I think they are really optimistic and they're looking to buy these stocks on it. But I think when we get conditions like that, where we are seeing stock markets rise on pretty much any excuse, the crash comes harder. And I think we have to look at how that's going to work in, and it sort of fits into my bullish view on the dollar, because when that happens, safe haven flow does tend to flow into the US dollar, and I think that's where we'll stick. So what we maybe need from a currency point of view is to see some real volatility in the stock market, and then we'll start to see the dollar accelerate.
All right, perhaps the view then the day of reckoning is coming for the equity markets.
We've been looking for that for a while.
Yeah. Nick, let's go to some of the charts. What we're seeing with the local currency, the Aussie, what it's sitting at 69.1 thereabouts at the moment.
Just around that 69, the figure level. I think there's a bit of options interest rolling off there today. So it's sort of oscillated around there for the last few sessions. We've got employment data coming out in the next 5 minutes, I think. So looking at that, I think we're looking for the unemployment rate. That will be the headline. I think we're looking at 3.5% there. But to us, mainly currency traders, they'll be looking for that data print, that rise and fall in the monthly numbers. And I think we're looking at plus 20,000. Always a good punting opportunity in trading floors about where that's going to come out. I'm personally leaning to maybe a lower print this time. That could take us a little bit lower and lead us toward that sort of resistance level that's coming in sort of around about 68 cents. It's going to be very interesting to see what happens, but also we'll see if that affects what we're seeing from the RBA as well. So we have got a very hawkish RBA at the moment, relative to how they normally sit on the fence, I suppose. If we do start to see these numbers change, then it might start to influence the RBA as well. So at the moment, we're sitting very range bound in the Aussie. We do need something to really kick it out that range, and maybe this is one of the first data prints that helps us.
Okay, is it still about that local data, or what, certainly as far as the China reopening is concerned, is that's sort of fully priced in at the moment?
Yeah, I think so. I think China's big influence on the Aussie, we know that. I think that's fully priced in. That's helped this resurgence in the Aussie from those low 60s. We're now looking for the next move in the Aussie, especially against the dollar. As I said, we've sort of got a stalemate between the two central banks. What we really need now is something to kick it one way or the other. This data print could be one of the first ones, but we're going to be looking at inflation. The same things we're discussing with the Fed, to be honest.
All right, well, inflation, of course, that remains the word globally at the moment. Nick, let's move to the UK. In fact, had its latest inflation numbers out overnight. Less than expected, or at least a sign, I should say, that it is coming off, perhaps monetary policy doing the trick. Well, it's still though sitting at what, over 10%.
Yeah, it's still a hefty number. So you look at the Bank of England, they're going to be wanting to see better. Like, yes, a trickle off, but they want to see it much lower than that 10% that we're currently sitting at. So how cable trades on that? We've had a really good move up in sterling, and there you can see, like, off those lows down when we thought it was going to break through parity, we're back up to sort of a more comfortable 120 level. Once again, we're going to need to see inflation come down. So with all these central banks and with all the influence, we are really data watching. We're data watching harder than maybe we normally do. Sterling sitting at an interesting level. It's bounced off that 200. This is the daily chart. I think it's bounced off recently that 200-day moving average. And it's sitting back around there, and it's sitting on not a particularly great trend line. But here we could start to see some decent moves in cable, and we know when cable does get moving, it gets moving. Yep. So this could be a really good trading opportunity. I'm looking at cable for over the next couple of quarters. We might see some decent moves, but we're going to need those data points to really get it rocking and rolling, I suppose.
We don't have the chart. What are you seeing in the euro at the moment? In fact, Christine Lagarde from the ECB reiterating that more aggressive rate hikes to come.
So, same sort of thing. I think we're at a real crossroads with most of the majors. Christine Lagarde also looking to be more hawkish. Data points are going to be interesting. We've still got to keep an eye on that Ukraine situation. It's just sort of a status quo at the moment for us, isn't it? So any geopolitical changes, we're in that sort of situation with most of the currency markets. We're waiting for something to happen, and I think we're not going to know what it is, but we'll get some sort of movement or something that will happen, and then bang, away we go. We'll start to see some big moves in currencies. At the moment, it's pretty range bound, but as soon as we start to see some decent sort of catalysts to start moving, I think we're going to see some decent breaks.
All right, and to the yen. Now, of course, the big news this past week has been the appointment of a new governor there. So I guess waiting to see whether there's any change in policy. What are your thoughts just as to what the influence he's likely to have?
I think from what I've been talking to a couple of Japanese banks, and they're sort of thinking that he's going to continue with the change that we've seen from the BOJ, and it has been a big change over the last few months. So I think that's going to support some of the moves that we've seen. We have to, for me, I'm always turning it into a currency play.
Yep.
With what we got from the Fed last night, I think we're a buy on dips in terms of dollar yen for the moment. But it'd be very interesting to see how he comes out. If he does come out a little bit stronger, we could see yen appreciate. And once again, it's probably another currency that I'm looking at on the crosses to see if we see that appreciation on the crosses rather than against the dollar. I think the dollar yen's probably stuck in ranges. They're pretty big ranges, and it's moving very, very swiftly. It will do 50 or 60 points quite quickly. But it's going to be an interesting, I think, a factor moving forward for the rest of this year, keeping a real close eye on how the BOJ changes as it moves into a sort of a more dynamic role than it has had for the last 15 years.
Yeah. All right. One to watch there as well. Nick, we're just about to get the latest jobs data. I'll just see while you're here, see whether that drops while I'm at it. In fact, unemployment, the 3.7%. So that's 0.2 up. Yep, from 3.5, and loss of 11,500 jobs. What's your immediate reaction to that? I was just trying to get a quick look at the Aussie dollar.
Good show to be on, because I sort of thought it might be a little bit lower. I don't know where the Aussies trade. I would imagine it's just dropped off a little bit. That's a decent. That will be the headline figure, that 3.7, the increase in the unemployment number. And
it is falling. It's 68.7 and falling.
Yeah, that's a decent knock. So 30 points down.
Yep.
And I think looking at that, that's 30,000 jobs less than was expected. So that should be a big hit. I think that will set the trend for the rest of the session for us with the Aussie.
Yep.
We'll probably be selling on any rallies that we get at the moment and looking for any breaks to the downside.